out now. Can you guys hear now? There we go. I can hear myself. Haha. Alright, that only took forever. Sorry about that, guys. My headset went totally out. Scramble for a replacement. Let's kick it off quickly. Alright, Friday session in U.S. markets was obviously very, very strong. We rallied straight out the gates. We opened up hugely, pushed to up almost 2% on the day at one point, and it faded a little bit from there. We did kind of bounce back into the close, for the last couple hours. But I think markets obviously caught some of the momentum players, some of the shorts very, very wrong-footed with some of the comments that came on Thursday afternoon and Friday morning, and obviously Friday you saw major reversal. So we've had a lot of earnings that have come out in the last week. Earnings numbers as broadly coming out quite nicely. So I think there's no real worries, there's no real negative forward guidance right now coming out of companies. So I think the negative focus is still around the eurozone, around how they're going to get out of the mess that they're in, around the slowdowns that we're seeing in certain areas, global growth, that sort of thing. All right. If we look at what happened in Asia, we got some. This is that's not right. That's not right. Sorry, guys. Obviously the chart here didn't paste from today's efforts. Anyway, Asia was up across the board. Nikkei had a huge rally this morning, up north of 3%. Obviously, because of rand weakness, we saw a resumption to basically risk-on strategies there. We had a hell of a lot going on over there. Obviously, the exporters are rallying. The mining companies out of Australia rose. Uh, not too hugely, but follow through a little bit from Friday's rally, and so we expect that to obviously give our market a significant boost as of this morning. All right, let's look at we've got on our charts of interest this morning. We've got a interesting chart here. I wanted to look basically the May to October period. You can see there, obviously, that everyone talks about the sell in May go away. Um, it's your return from May to October historically from 29 to 2014 is 1.93%, which is quite a paltry sum for 6 months. That's almost 2% worse than the 6-month average. And then November to April is actually the highest return period historically, which we're obviously getting close to going into. We're about a week and a half of going into the November period. That lines us up for our highest return 6-month period, obviously on average year since 28. So I think that's something to keep in mind. Obviously, we've got the selling period. This is usually when we start to see the corrections, or September and October, and those are the points that typically mark the lows, and then we typically rally into the beginning of the year. All right. Yeah, corporate action today. The only thing we've got here locally is Famous Brands. After that, we've got Halliburton, Texas Instruments, IBM, and Apple in the States, which is coming after the bell. Obviously, there'll be an enormous amount of focus on Apple after the bell, but other than that, not a not too much to really pay too much attention to today. Right. In terms of market data today, we had UK Rightmove house prices this morning, a little bit softer than prior numbers. Leading index numbers out of Japan that looked solid. We had PPI out of Germany that came in line, and then we've got the current account and industrial orders later out of Europe and out of Italy. So let's get into the maps real quick. We'll try to keep this short because we're running so late this morning. First thing that I wanted to have a look at is a couple of the gold stocks. I know that we sorry, we had looked at this, I believe, on Thursday and on Friday, but we're just kind of trying to keep you in touch with what's going on, what we're really watching. That's Anglo Gold. Anglo Gold absolutely puking the 116 level. We'll call it 116.50 level on Friday, and I mean we've got the gold price, which is up mildly this morning, but this is a real bearish sign, I think, for gold prices. Remember, we have bounced about 50, 60 bucks off the recent lows in gold prices, and this is all you can do. It's quite a negative, so to keep that in mind. Watch this thing closely going forward. This thing can very easily trade down below 100 bucks from here if we stay below 116. And the next one we'll look at is Harmony, and Harmony is also looking very bearish here after dropping. No, no, I mean, I'll take this actually back a little bit further so you can get an idea. So same sort of thing here. Let's just throw that out. So that's where we took out the new lows, and we've took out the new lows only to now start to consolidate and really looking like we're about to rip below this little consolidation here, and we're pretty much right on supports. I mean, I think what would be the easiest thing to look at here in terms of looking for the right number to sell would be to drop this previous closing low, which is at 2090. It's a little bit below here, but I think either way we're very close to looking very ominous here in this consolidation. Anytime you have a big downward move like this, especially drop a level, then put in a consolidation like this, chances are probably 7 out of 10 or 8 out of 10 we're going to drop back down to the downside out of this consolidation. Right, First ran major move the last couple of days. You can see breaking out of what is looks like a flag in the longer term pattern here off of major supports. I mean, this thing has been just the absolute most rock solid bank. If we just go out a little bit further to give you more big picture, you can see it just really looks like a flag here. If you look at it in the big picture, basically came down, tested support, and now we're ripping back up to the upside. So I'd watch this one really closely. I'd just watch the banks in general. I starting to look a little bit better. Maybe looking like we've got some upside finally after this onslaught that we've seen. All right, next one we'll look at is Kumbaya. We broke out uh, moderately um, on Friday, but we got above this little resistance pattern, and we're kind of consolidating right or this little resistance level, kind of consolidated right around that level. And then Friday we popped up above it. We actually got above 300 right before the close. The close the stock down about $3. I think on the Wisdom Tree reweightings, which is actually supposed to be one that they had to buy. But either way, I think this opens the door, and the sort of height of this channel that we put in here really looks congruent maybe to take us up to around the 325 level in Kumba. So just watch that closely. We could still have a nice dead cat bounce coming there. And then the last one I'm going to show is SA Breweries, which we also showed a couple days ago. We basically came down, tested these exact lows more or less. We did push through it intraday, but we closed right on it as well, only to get a massive reversal on Friday. We did over 3% on Friday in London. We actually closed up 4.1% on Breweries. So watch today. There could be actually another day of follow through here. I wouldn't be surprised. In the grand scheme of things, in this move down, this bounce is actually still kind of pittance. So just watch it closely. Bouncing beautifully off the 200-day moving average. Could have some more upside in the next couple of days. That's it for today, guys. Thanks a lot.